Hello everyone, and welcome back to Buffett Investment Legend. In today's video, we're diving into one of the most important rules ever taught by Warren Buffett. Why you should never invest in what you don't understand, rule number 2. Because in today's market, people are risking money on stocks, trends, and hype they barely understand. And many don't realize the danger until it's too late. But Warren Buffett believes one simple rule can protect you from costly mistakes and help you invest with confidence instead of emotion. So before you buy your next investment, watch this carefully. Let's begin. Most people think they understand what they invest in. But the truth is, they don't. And that's where the problem begins. You've probably heard someone say, "I know this company. I use their product. Everyone is talking about it." And somehow that feels like enough. Enough to buy the stock. Enough to risk your money. But here's the reality. Knowing a name is not the same as understanding a business. Just because you use a product doesn't mean you understand how the company makes money. Just because a stock is popular doesn't mean it's a good investment. And just because everyone else is buying doesn't mean you should. This is what psychologists call the illusion of knowledge. It's that dangerous moment when you feel like you understand something without actually understanding it. And in investing, that illusion can be very expensive. Think about it. How many people jumped into hot trends? AI stocks, crypto, whatever was next. Not because they understood them, but because they didn't want to miss out. They saw prices going up. They heard success stories. They felt confident. But that confidence wasn't built on knowledge. It was built on noise. And here's the dangerous part. When you don't truly understand what you own, you don't know what to do when things go wrong. So when the price drops, you panic. You doubt yourself. You sell at the worst possible time. Not because the investment was bad, but because you never really understood it in the first place. And this is exactly why Warren Buffett warns. The biggest risk in investing isn't volatility. It's not knowing what you're doing. Because the market doesn't punish ignorance immediately. It waits. And then, it charges you with interest. So what does this rule really mean? When Warren Buffett says, "Never invest in what you don't understand," he's not saying you need to be a genius. He's not saying you need a finance degree. And he's definitely not saying you need to analyze every number on a spreadsheet. What he is saying is much simpler. You should understand how the business actually works. Not the stock price. Not the hype. Not what people on the internet are saying. But the business itself. Can you answer this? How does this company make money? Where does its revenue come from? And more importantly, why do customers keep coming back? Because if you can't answer those questions clearly, then you're not investing. You're guessing. Buffett has a concept he's followed for decades. It's called the circle of competence. The idea is simple. You don't need to understand everything. You just need to understand a few things really well. Think about it like this. If you stay inside your circle, you can make confident decisions. You can stay calm when prices drop. And you can spot real opportunities. But the moment you step outside that circle, everything changes. You start relying on opinions. You follow the crowd. You react emotionally. And suddenly, you're no longer in control. That's why Buffett doesn't invest in businesses he doesn't understand. Even if they're popular. Even if they're growing fast. Even if everyone else is making money. Because for him, clarity is more important than opportunity. He would rather miss a great investment than invest in something he doesn't fully understand. And that's a mindset most people don't have. They think more opportunities equals more money. But Buffett thinks differently. Fewer opportunities, better understood. That's how you build real wealth. At first, this rule sounds simple. Almost too simple. But don't underestimate it. Because this one principle is what separates people who guess in the market from people who consistently build wealth. Let's break down why this is so powerful. First, understanding gives you emotional control. When the market drops, most people panic. They see red numbers. They feel fear. And they sell. But if you truly understand what you own, You don't react the same way. Because you're not just looking at a price. You're looking at a business. You know how it makes money. You know why it has value. And you know whether anything has actually changed. So instead of panic, you have clarity. And that clarity gives you something most investors never have. Conviction. Second, understanding helps you recognize real opportunities. When prices fall, most people see danger. But experienced investors see something different. They ask, is the business broken? Or is the price just lower? And only if you understand the business can you answer that question. That's how great investors find opportunities. Not by chasing what's rising, but by recognizing value when others are afraid. Third, understanding protects you from traps. Because the market is full of noise. Hot stocks. Breaking news. Next big thing. And if you don't understand what you're looking at, everything starts to sound like a good idea. But when you do understand, you filter everything differently. You don't get distracted. You don't chase hype. You simply say, I don't understand this, so I pass. And that one decision can save you years of losses. This is why Warren Buffett has always focused on businesses he can clearly understand. Not because they're exciting, but because they're predictable. And in investing, predictability is power. Because at the end of the day, understanding creates conviction. Conviction keeps you consistent. And consistency is what actually builds wealth. Let's make this real. Because understanding this rule intellectually is one thing. But seeing how it plays out in real life, that's what makes it stick. Imagine two investors. Same market. Same opportunity. Same stock. But completely different outcomes. Investor number one, the one who doesn't understand. He hears about a stock that's going up fast. Maybe from a friend. Maybe from social media. Maybe from the news. Everyone seems excited. So he thinks, this must be a good investment. He doesn't really know how the company makes money. He doesn't understand its risks. But the price is going up. And that feels like enough. So he buys. At first, everything looks great. The stock keeps rising. He feels smart, confident, even a little proud. But then, the market drops. Suddenly, the price falls 10%, 20%, maybe more. And now, everything changes. He starts asking questions he should have asked before. Why is it dropping? Did I make a mistake? Should I sell now? But he doesn't have answers. Because he never understood the investment in the first place. So what does he do? He panics. And he sells? Usually at the worst possible time. Investor number two, the one who understands. Now let's look at someone else. Same stock, but a completely different approach. Before investing, they took the time to understand the business. They know how the company makes money, what drives its growth, what risks could affect it. So when they buy, they're not buying a price. They're buying a business they understand. Now the market drops. The price falls, just like before. But this time, the reaction is completely different. They don't panic. They don't rush to sell. Instead, they ask one simple question. Has anything fundamentally changed? If the answer is no, then to them, this isn't a problem. It's an opportunity. They might even buy more. Because their confidence is not based on price. It's based on understanding. The twist. Here's what makes this powerful. Both investors bought the same stock. But one lost money. And the other built wealth. Not because of luck. Not because of timing. But because one understood. And the other didn't. And that's the difference this rule makes. This is why Warren Buffett doesn't just focus on what to buy. He focuses on whether he truly understands it. Because in the end, the market doesn't reward activity. It rewards clarity. So how do you actually apply this rule? How do you know if you truly understand an investment? Or if you're just thinking that you do? Warren Buffett has a simple way to filter this. Not through complex formulas. Not through predictions. but through a few very simple questions. And if you can answer these clearly, you're probably on the right track. If you can't, that's your warning sign. Question number 1. How does this company actually make money? This sounds obvious, but most people skip it. They know the brand. They know the product, but they don't understand the engine behind it. Where does the revenue come from? Is it recurring? Is it dependent on trends? Or is it stable over time? Because if you don't understand how money flows into the business, you can't predict how it survives. And if you can't predict that, you're not investing. You're speculating. Question number 2. What could destroy this business? This is where most investors get uncomfortable, because it forces you to think about risk. What could go wrong? New competitors? Changing technology? Regulations? Loss of customer trust? Every business has weaknesses. The question is, do you know what they are? Because understanding risk doesn't make you fearful. It makes you prepared. And in investing, preparation is what separates confidence from blind optimism. Question number 3. Can I explain this in simple terms? This is the ultimate test. If you truly understand something, you should be able to explain it simply. Not with jargon. Not with complicated language. But in a way that anyone could understand. If you can't do that, then chances are you don't really understand it yet. And that's okay. Because this rule isn't about being perfect. It's about being honest with yourself. Buffett once said, if you can't explain it simply, you don't understand it well enough. And in investing, that gap between thinking you understand and actually understanding, that's where most losses happen. The bottom line: before you invest in anything, pause and ask yourself these 3 questions. Because if you can answer them clearly, you're investing with clarity. And if you can't, the smartest move you can make is to walk away. Now here's the uncomfortable truth. Most people don't break this rule once. They break it over and over again. Not because they're careless, but because these mistakes feel normal. Let's look at the biggest ones. Mistake number 1, chasing trends instead of understanding value. A stock starts going up. Everyone is talking about it. It's on the news. It's all over social media. And suddenly, it feels like an opportunity you can't miss. So you jump in. Not because you understand it, but because you don't want to be left behind. This is how people end up buying at the top. Because they are not following logic. They're following momentum. And momentum doesn't last forever. Mistake number 2, relying on other people's opinions. Someone says, this stock is going to explode. This is the next big thing. Maybe it's a friend. Maybe it's an influencer. Maybe it even sounds convincing. So you trust it. But here's the problem. Conviction borrowed from someone else disappears the moment things go wrong. Because when the price drops, they're not there to make the decision for you. You are. And if you don't understand the investment yourself, you won't know what to do. Mistake number 3, confusing price movement with understanding. This one is subtle and very dangerous. You buy something, the price goes up, and suddenly, you feel like you made a smart decision. You feel like you understand the market. But in reality, you were just lucky. Because price going up doesn't prove your thesis is right. It just means the market agrees with you, for now. And when that changes, so does your confidence. Mistake number 4, overconfidence without real knowledge. This is where everything comes together. You've seen some wins. You've heard enough information. You feel like you get it. So you take bigger risks. You move faster. You stop questioning yourself. But underneath that confidence, there's no real understanding. And that's the most dangerous place to be. Because as Warren Buffett has shown time and time again, confidence without understanding isn't investing. It's gambling. The reality check. None of these mistakes feel wrong in the moment. They feel exciting. They feel logical. They feel justified. But over time, they lead to the same result: confusion, emotional decisions, and unnecessary losses. And all of it comes back to one simple thing: breaking rule number 2. So how do you actually apply this rule, starting today? Not next year. Not when you have more experience. But right now. Because the truth is, this isn't about learning more. It's about changing how you decide. Here's how to do it. Step 1. Stay within what you understand. This is where most people go wrong. They think, to make more money, I need more opportunities. But that's not true. You don't need more options. You need better ones. So instead of chasing everything, start filtering. Ask yourself, do I actually understand this business? If the answer is no, that's not a missed opportunity. That's a filtered risk. And that mindset alone can change everything. Step 2. Keep your research simple. Most people overcomplicate investing. They think they need complex models, advanced analysis, insider-level knowledge. But Warren Buffett has always done the opposite. He simplifies. Because real understanding is simple. If a business is too complicated to explain, it's probably too complicated to invest in. So instead of trying to know everything, focus on the basics. How it makes money. Why customers choose it. What could go wrong. That's enough. Step 3. Give yourself permission to pass. This might be the most powerful step of all. You don't have to invest in everything. You don't have to chase every trend. You don't have to act on every opportunity. In fact, most of your power comes from what you don't do. Saying, I don't understand this, so I'll pass. That's not weakness. That's discipline. And discipline is what protects your money. The shift that changes everything. Most people think investing is about action. Buying. Selling. Moving fast. But the best investors think differently. They wait. They filter. They act less, but with more clarity. And that's why over time, they win. Because in the long run, you don't get rewarded for doing more. You get rewarded for doing less, but better. At the end of the day, great investing isn't about doing more. It's about understanding more. Warren Buffett built his wealth on simple rules like this. And rule number 2 is one of the most important. Never invest in what you don't understand. If you found this valuable, take a second to like the video and subscribe for more content like this. Because the difference between losing money and building real wealth often comes down to what you choose to understand. See you in the next video.